This is the briefing for Tuesday, November 4th. In yesterday's briefing, and I think in the weekend briefing, I talked about the fact that the buy the dip buyers were basically controlling what was happening, that every time we got a move to the downside, they would step in and start buying and drive price back up again. That was a result basically of a lack of selling pressure. But the internals were basically signaling that the market is very, very weak from an internal structure perspective. And I went through all of those components that I look at, or most of the components that I look at in terms of market internals. But so today we did get a sell-off, and that sell-off was very interesting to see. Now, typically in the past, when we get a market that has an attitude of buying the dip, or an environment of buying the dip, it continues until the dip buyers get run over. And when I say they get run over, typically what I mean is that they get really just swamped. That price begins to fall pretty dramatically, and it's very, very difficult for them to get out without taking some huge losses. So, the question facing us now, was this that type of a sell-off? I don't think so. Now, that could change tomorrow, but I really don't think so. We had a gap down. This is the spiders on a 60-minute basis. And then we had kind of a little bit of a rotation up and a slow rotation back to the downside again. Now, I'm going to point this out in the spiders because it's not the case in the other two indices, but look what happened with market breadth. This is S&P 500 breadth, and this is the spiders, the ETF representing this S&P 500. So you can see that it was strengthening all through the day. But as I discussed in last night's briefing, that a break of this support level from this area of rotation would open up a test of this level, and breaking that level would be a significant event that would potentially relate to running over the dip buyers, or potentially leading us to a greater degree time and price counter trend rotation. And that's exactly what happened. It's very interesting that this 675 level held today, 674 up to about 675, that held today. So that's going to be very important going forward tomorrow. Breaking today's low in the spiders is going to suggest potentially that we've got further downside work to do. What's going to be important, if we break today's low tomorrow, then it's going to be important for breadth to begin to decline and support that move. Otherwise, you're going to see a gap down, and then the dip buyers are going to step back in and drive price back up through the 675 area. A little different in the Qs. You can see the gap down. We had a little bit of rotation for about 2 hours. This is an hourly chart, right around the 625 area, and then of course the slow grind lower going into the end of the day, closing pretty close to the low of the day. That's going to open up potentially a potential test of the 615 area, which would be the next level of support. Resistance coming in at 625 in the Qs. But you can see the difference in what happened with market breadth. There's no divergence here in terms of market breadth. And the same thing with the IWM breaking through the 244 area and then closing right at the 241 area. You can see breadth was basically declining through most of the day. A little bit of a tick up right there before it turned to the downside once again in the IWM. So the Russell really is leading, and you can see that just from looking at these charts. This chart is pretty close to this chart, so the spider is pretty close to the Qs. Pretty big difference in the IWM, but typically they're going to get probably hit harder based on the type of companies that are listed on the Russell 2000. So let's look at the hourly chart, the daily chart. You can see the rotation for the last 6 days of trading, and then of course the breakthrough in today's trading through the 677 area. If we close below today's low tomorrow, next level of support is going to come in at this low right here at 663. And that's going to open up the potential of trade down to the 651 area. As I've been pointing out, you can see that this is 52-week highs minus 52-week lows. The divergence that occurring had a spike up on this day, but then declining. And you can see these 5 days here You can see the decline in 52-week highs minus 52-week lows. This is NYSE breadth. You can see the decline that was happening there, and then of course becoming even more exacerbated over the last several days. So the internals basically have signaled the potential for weakness in the market unless that changed, and it did not change, so we did have a sell-off in today's trading. The key for tomorrow is going to be whether there's going to be follow-through and whether it's going to hold or whether we're going to see a rotation back up again. This is the Qs on a daily basis. You can see that the NASDAQ breadth was declining, another decline right through there. So the market was showing a lot of weakness in the days coming up to today. Russell breadth, you can see on a daily basis, really not making any new highs here, but just in a rotational pattern as well. Looking at where we are in terms of overbought and oversold, NASDAQ is extremely oversold. So that suggests potentially there's going to be some type of pause or potentially some type of rotation back to the upside. NYSE is not oversold yet. It still has a ways to go before that would occur, but it's going to be interesting to see what happens with the NASDAQ tomorrow. I would watch the NASDAQ pretty carefully. If the NASDAQ starts to trade higher and red is stronger than it was in today's trading, that's going to give us a pretty good indication that the others might follow. And the S&Ps may have been signaling that as well, because the breadth in the S&P 500 breadth, as I said before, was strengthening all through the day as price was declining. So that's going to be important also. We did take a hit in terms of the 52-week, the 20-week stocks above or below the 20-week moving average and the 50-day moving average. Excuse me, I'm stumbling over my words. So this is the percentage of stocks above the or the number of stocks above the 20-day moving average and the number of stocks above the 50-day moving average in terms of the S&P 500. And you can see that we are really declining. This was really signaling a pretty steep probability that we were going to see some type of rotation to the downside. This is the 20-day moving average, stocks above or below the 20-day moving average, and you can see that it has declined pretty significantly, and this is the 50-day moving average. And then, of course, the Russell is the same thing. Russell showing some pretty significant losses here. So it's going to be interesting to see what happens tomorrow. Tomorrow is going to be very important. Either we're going to see the dip buyers step in the morning and try and drive price up. And then if we see selling come in and they get crushed, that's a pretty big signal that we're probably in the process of a greater degree time and price counter trend rotation. If we see the lower price and we see the buyers step in and they start to drive price back up, and there is no reversal, then that's going to suggest that we're just simply completing a rotational pattern in a greater degree time frame, as you can see right through here. If I back this up, so you can see that right through here, this rotational pattern in a greater degree time frame. And I pointed that out last night, in that this was a shorter degree time frame rotation within a greater degree rotational pattern. So tomorrow is going to be very important. You can see the Russell closed at the low of the day. The NASDAQ or the Qs have a little bit farther to go. So tomorrow, the first hour of trading is going to be really, really important. And I'll pick this back up again tomorrow. Have a great night.